What is going on? Welcome back to Trending Stocks. Today I want to go over my short watch list. So 3 stocks that I do see that have a huge amount of potential to squeeze based on the fundamentals behind the scenes. So I'm going to go over all the stuff you need to know. Make sure you guys hit that thumbs up and subscribe. I always greatly appreciate that. And without further ado, let's get right to it. So when it comes down to this particular week, there's no real economic data to really prompt a market-wide rally, although there is 5 different instances of the Feds speaking. And of course, that could prompt a very good rally. And when the market does rally, the shorts are a little bit more inclined to return their shares. So I'm going to go over my top 3 stocks that potentially could squeeze, not in any particular order whatsoever. So I'm going to go over all that, and starting off with number 1. Beyond Meat, ticker is BYND, and over the last, give or take 1 year, it's been down roughly about 67%, and over the last 5 years, down 71%. And I think in general, it has rallied with the rest of the market during 2023, but still, it is at a substantial discount to what it was, largely due to several different factors. But I want to go over this. The short score is 96, extremely high, and the higher the number, the higher the likelihood of a squeeze happening. Utilization is 100%. And as you can see based on this chart right here, I'll just make this a little bit bigger so you guys can see, this is all the failure to deliver right here. So I'll make it a little bit easier as well. Right here, all these bar chart right here, that is failure to deliver. And it is through the roof. So there is a lot of naked shorting that is happening. And of course, there's a big battle going on right now about naked shorting. And potentially that could also aid into an even bigger squeeze as well. But as of right now, the stats behind Beyond Meat, there's 21.67 million shares being shorted. 37.23% is the short interest, which is a percentage of their free float. And cost to borrow. Looking at cost to borrow average is 241.24%, extremely high. And cost to borrow max is 286.13. And to make things even better, it is currently on the threshold list. And of course, that's in relation to failure to delivers, and ultimately could result in a little bit more of a tentative bump up in price just based on that. And of course, options is a very big thing for Beyond Meat as well. That could aid into a little bit more of a gamma squeeze, and of course that would help into a broader short squeeze. And also, just to cap it off, as far as trading signals over the last little bit, so February the 3rd, there was a RSA type 1 that was done, and also a short squeeze type 2. So of course, that is a very good indicator that potentially it might squeeze. So again, that is number 1, not in any particular order like I mentioned. And second one is EVGO, and ticker is EVGO. Pretty simple in that regard. Similar fashion as Beyond Meat, down roughly about 17-18% for the year. Last 5 years down 31%, and similar fashion, it has really rallied with 2023. But when it comes down to the stats, what it is saying, short score is currently 98, utilization is 100%, shares on loan is 35.27 million, so very, very high in that regard. And as far as what is the breakdown, once again, it is on the threshold list, so that is definitely going to really help EVGO potentially have a good squeeze. 38.55% is the short interest, which is a percentage of the free float, and 26.41 million shares is overall being shorted. Cost to borrow average is 253.18%. So that is mind-blowingly high. So when it comes down to even just a positive aspect on EVGO, if it goes up 5%, shorts are losing a lot of money just based on their initial investment, and they also have to continue to pay roughly about 253%. But keep in mind that's on an annual basis. And when it comes down to EVGO, as far as trading signals, just wanted to give you a good overview. There hasn't been any, but the last couple was on January the 24th as far as a short squeeze. And of course, based on the price since then, it has gone up quite a lot. So basically around here a little bit. So definitely that's something to watch for. And finally, my third one is AMC. Of course, everyone loves AMC one way or another. Ticker is AMC. Over the last year, it's been down roughly about 60%, and over the last 5 years, down 54%. Of course, that's not really factoring in this huge squeeze that did happen. And all 3 of these do have a pretty significant amount of naked shorting that is happening. And you can tell that based on the failure to delivers as well, is through the roof. And short score on AMC is 90, utilization is 100%. And what is basically with AMC, it is on the threshold list again, and 22.79% is is the percentage of the free float. 117 or 118 million shares is being overall shorted. Extremely high. And when it comes down to even the last two that I did bring up, so Beyond Meat and EVGO, you can see the cost to borrow average with AMC is 444%. That's just insane. So shorts are very much going to be on just the verge of a very, very big squeeze. And of course, when it comes down to AMC as well, they have that options aspect as well that could potentially aid in a squeeze as well. So that's definitely some things to factor in behind the scenes. And as far as trading signals for AMC, it does look like on February the 3rd there was a short squeeze type 3, and of course that is a very good return because that one also does yield a roughly about 15% yield. So definitely very good thing in that regard. So let me know your thoughts on these three top picks for potentially squeezing. I'm going to make this a little bit more of a reoccurring video, so every Sunday I'll be going over 3 potential stocks that could have a squeeze. Of course, when it comes down to a squeeze, just so you guys are aware, and I'll kind of go over this for a little bit. So again, short score is currently 90 on AMC. That is broken up for several different factors: utilization, high short interest, and cost to borrow. Those are the 3 things that really make up a fairly high chance of a squeeze. But more commonly not, what you need is some justifiable reason. So you need a unknown catalyst, whether it be just broader economic kind of rallying or potentially something specific for the company. You need that. You need all 4 factors for a squeeze to occur. So again, that's just a little bit more of a breakdown that you need to know. But if you haven't already, hit that thumbs up and subscribe. I always greatly appreciate that. If you do like my channel and support the growth, take a look at my memberships, link in the description below, or just hit the join button at the bottom of the screen. With that said though, I appreciate you guys watching. Let's all make a lot of money on all of these 3 companies.